Hey there, it's Bill with SmartTrades, and it's Monday, January 17th, around 5:30 p.m. And we have hit the 1290 area on the S&P, so I thought I'd do an update since a few folks have been asking for me to do so. Um, anyway, noted on this chart is my count that I've had out there for some time, at least the intermediate term count showing 5 waves up. 1 equals 5 around 1286, 1287. That would be equivalent dates would have come in around somewhere in the 3rd, 4th, or 5th of January. So obviously we've surpassed that 1 equals 5 both in terms of price and time a little bit. I had stretched out the target up to 1290, and indeed we may go a little higher. You can see the trend line connecting the tops of waves 1 and 3, and that is still a little bit above where we are now. The 1 equals 5 guideline is just a target. It's not something written in stone. I will, however, bring your attention to the fact that we're getting lower and lower peaks on the breadth ratios of the NYSE advancing issues I use as a surrogate for breadth. And as we head higher, indeed, the likelihood of some kind of at least intermediate term correction is increasing with the non-confirmations in breadth. There are other non-confirmations too, like some of the China broader markets are also not following suit with the American markets. And anyway, here's the 130-minute chart of the S&P. Here's that wave 4 noted on the daily chart, and from there we can now clearly count a 5-wave pattern up to Friday's high. And in fact, you can see even the breakdown of 5 waves within 3, a kind of triangulation of this small wave 4. And again, look at the breadth ratios tailing off and not confirming the new high. Here again is that trend line somewhat overhead. So indeed, a little bit more upside is certainly still possible, but there are red flags starting to wave in front of this bull, and so we shall see if it does indeed make a turn. 30-minute chart S&P, and here is the wave 4 from the previous chart, and you can see once again, even on a smaller scale, we have a potential terminal 5-wave pattern up to Friday's high. And you can see again, here's that breakdown of 5 waves and that triangulation, if you will. It's not a perfect triangle. I'm not necessarily even calling it a triangle, but that's the nature of 4th waves. They tend to be contracting flat types of patterns, and so there you have it. And again, there's our bearish divergence, fairly sharp on the NYSE over the last few days. Now, probably most of you have heard that Steve Jobs is taking a leave of absence due to illness, and once again, the last time he did so, the market was rocked a bit, and you can see the NASDAQ has been on the futures overnight has been affected quite sharply, and indeed we've broken through a trend line there. Now, on the S&P, we're not nearly down as much, so. Is it a turn? It may be a turn in just the NASDAQ, and that the S&P has still got a little further to go. But as always, we'll take it one step at a time. That said, here is the NASDAQ pattern, and we had a wild bar on the 3 o'clock Pacific time opening of the NASDAQ futures this afternoon. And I would ignore that tail pretty much. I think that's just bad data, slipping stops and so on. At any rate, we do have that sharp, impulsive looking decline. What I would be looking for now to confirm a top is an ABC up, a corrective rally that's relatively flat to sideways to slightly higher, and then a sharp decline. That would be confirmation that a top is in. Obviously, if we go rocketing back to new highs, particularly in the NASDAQ, the S&P again could make a moderate new high. It's not going to really upset the apple cart. If the NASDAQ, on the other hand, just blast through 2330 or so, that would be a concern in terms of the topping process from my perspective. Here's the NASDAQ Qs. Again, here is the advanced decline line. This is the NASDAQ advancing issues, and you can see they line up very nicely. Again, bearish divergence. Again, wedge type formation. Oftentimes these are terminal. Likely the Qs are going to break this trend line on the open Monday unless we get a big rally overnight. And now on to gold. Gold, basically my perspective on gold is that it is breaking down. To me, this rally here obviously was corrective in nature. We broke down out of it. I think we're putting in another smaller magnitude correction, which could lead to a break of these previous lows. Once again, what we're looking for is a fairly shallow rally relative to this decline. If we go blasting through that 1390 area, we'll have to reevaluate it. It's possible it's a larger ABC. If that happens, it doesn't necessarily mean we haven't topped. But ideally, I'm looking for a relatively shallow corrective rally. Crude oil. Crude oil stands a much better chance of making a new high. Here's that trend line we've been looking at for months. Indeed, it looks like we are going to go back up and test that. Ideally, what we would look for here is a rally back up and a failure at that trend line. I think at least we're going to see a correction back to perhaps the 87, 88 area, probably better yet to the bottom of this channel. But again, let's take it one step at a time. Let's see how it reacts up here around this 9250, 9250 plus area at that trend line. The Euro FX, this has been a difficult market in my book in terms of the overall wave count. I do think that it seems to be evolving into a flat correction in a bear market for the euro. The targets on this C wave of this correction would be about 135.40 and then 137.35 or so. That's 1.72 times A, typical of a expanding flat or regular flat correction, and or 1.62 times A, that comes in again around that 137.35, 137.40 area, A, B, C. Obviously, the dollar is almost exactly an inverse pattern to the euro. And here's the longer term picture of the dollar. And I posted this chart or a variation of it before. And ideally, let's back up just a little bit. I went forward instead of back. Okay, A was approximately 5, maybe 600 points or so. If B is a similar magnitude, that would take us from this area up to about 85. Certainly it could be a little bit longer than that if we go all the way up to the top of this channel where it is now. You're looking at about 86 or 87 for the dollar. And then the potential, if indeed this is a triangle, and you could count the triangle a variety of ways, but one way obviously to count it is that it started here and it's A, B, C, D, fifth leg up. E of the triangle, which would be terminal, and then we're going to drop back down through the bottom of the triangle back to perhaps the mid to upper 60s for the dollar. Pretty severe decline, obviously, if that takes place. That said, I mean, the other point of view here is that indeed we're going to have a major dollar rally and deflation and so on and so forth. The key area for that is up around the high 80s into 90. If we were to blast above these highs, obviously that would be that would invalidate the triangle altogether and make the more bullish count for the dollar come into play. That said, for now, I'm relatively bullish the dollar as long as we hold those recent lows. And here's the bigger picture, and you can see we have a giant descending wedge. Perhaps ultimately the camp that says that the dollar, we're going to have a major dollar in the rally, is going to turn out to be correct, but we may indeed have one last fall to a new low if obviously this is a triangle. Triangles tend to break out in the direction of the trend, and the trend, when looked at from a monthly perspective, is still down. So anyway, the bottom line is I don't want to get too far ahead of myself on this count. I certainly don't know, how, years to come how this is all going to play out, but it's something to look at here into the weeks and months ahead. If indeed we do falter at that trend line or a little below it, again, perhaps 85, 86, 87, that's a signal to me that potentially we are going to break through the bottom of the triangle. On the other hand, a breakout above the top of the triangle, 88, 89 area, depending on when we get through there, obviously is bullish for the dollar, and at least I think would lead to a test of the top of this large wedge, which at this point comes in around 95. One last thing I wanted to look at. A lot of folks ask me, how do you get into the markets at these targets, or when should you get in? One of the things that I like to do is use a method called the opening range breakout, or various variations of that. This method was made famous by Toby Crable back in the late 80s. He published a book called Trading Short-Term Patterns and the Opening Range Breakout. That book's now out of print and selling for up to $1,000 on Amazon. A lot of the methods in that book apparently he used to manage money and was managing billions of dollars. At any rate, the basic idea is pretty simple. You look for range contractions and you play the breakout of the opening range, be it X points from the actual open or the range of the first hour or whatever. There's a whole infinite variety of ways to play the methodology. Anyway, this is a very simple system that I've done, and I've plotted it on the used TradeStation to plot it on the Russell 2000 IWM index. And what I'd like to bring to your attention here is the basically the fact that it was profitable both on the long side and the short side over the last year or so. This is not quite a year's worth of data. And what is interesting to me is it was actually more profitable on the short side. Anyway, this particular method, again, it's a pretty basic opening range breakout system. If you're interested in learning more about systems like this and methodologies like this, I do offer a service at SmartTrades.com, a monthly service, and for folks that subscribe there, I'm going to be putting together a kind of a trading course, if you will, and as I put that together, it's going to be part of the subscription package that I offer. Again, that's SmartTrades.com, and what I'm going to do is try to show how these methods are used and how I use them in everyday trading, and eventually I'm going to put together a trading course, and we'll see how that goes. Anyway, one step at a time, as always. Anyway, thank you so much for watching. Hopefully you had a great long weekend, and we'll have a great week ahead. Thanks again. Bye-bye.